You're listening to UCW Radio.
In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
Greed, for lack of a better word, is good.
You know what I mean?
Money to be made in a place like this.
Money never sleeps, pal.
You're crazy. Don't run when you lose. Don't whine when it hurts.
You know what it takes to sell real estate?
It takes brass.
I've fallen, and I can't get up.
Welcome to Money Never Sleeps. This is the show where we talk about anything and everything that impacts the flow of money from around the corner to around the world. And thank you for joining me again today. What are we going to be talking about? Okay, we're going to be talking about celebrities, athletes, fund managers. And what are they doing? They're getting involved in SPACs. Okay, from Jay-Z, Steph Curry, Shaq, A-Rod, Colin Kaepernick, Serena Williams. Okay, and now they're talking about Kim Kardashian. You know, when does it end? You know, you have so much dry powder that's going around, and people are looking for something to do. They're looking to get involved and capitalize on what's happening. You have a lot of companies out there that private equity firms have, and they want to find an exit for them where they can continue to grow, not just to go and unload them, but for growth purposes. You have a lot of fund managers, celebrities, athletes, people of that nature, you know, affluent people that are going, even, you know, major CEOs of companies. They're going and they're beginning, they're creating these special purpose acquisition companies for the purpose of targeting a great acquisition and helping the companies to grow. Now, if you're a specialist in an area, yeah, I get it. Okay, if you have, you know, and I'm waiting for The Rock to wind up doing something here. You know, I know DJ's probably been thinking about this and thinking of how he can wrap his head around it, and you know, I'm sure his team already has it figured out. So that's going to be the next thing, and that's going to be, I'm telling you, I see that happening. But getting back to everyone else, okay, you know, they're creating these SPACs. They're looking to create opportunity. The thing about when you're talking about SPACs is that the fund managers themselves, they make a lot of money. They make a lot of money as the company works. Okay. The SPACs, they have all different structures and all different things going on. The bottom line here is that as a sponsor of a SPAC, you need to make sure you're targeting the right thing. You have a lot of SPACs, more so now than ever I've seen in many, many, many years. Okay, you have a lot of these deals going down. You have companies that were probably anticipating an exit later on that are considering it now. Yeah, you know, and the opportunity's there. These SPAC creators, no matter who they may be, they have to find the deals. The deals aren't just going to come out of nowhere. Unless you are creating and developing these things, these companies, and helping to cultivate them, you know, I mean, that of course, that'd be a conflict of interest doing that. But I'm just saying that the companies are out there. You know, it has to do with seeking them out and understanding what the future potential is. You know, getting a company that makes widgets and that's what they do, putting that into a SPAC. What's the upside there? Okay, there's limited upside. So what these SPACs are looking for, they're looking for technology. They're looking for high growth, high yield, things that are in that growth phase. And I know because we have companies that are in that super duper growth phase, and we're excited about it. You know, and I speak to some of these sponsors. You know, it's not the time for us yet, but it will be at some point with some of the companies that we do have. The bottom line is doing it the right way. And I just hope that, you know, for the Shaqs, I mean, Shaq is a great businessman. In case you don't know, you should know. Okay, the guy's a great businessman, you know, but Kaepernick and A-Rod and Jay-Z, great businessman too. But, you know, Serena Williams, of course, you know, she's married to a great businessman and she's a great businesswoman herself. The point of the matter is that you have, again, a lot of these SPACs that are being created, and the companies, you know, that are out there that are looking for a home. it's not balanced. You have too many SPACs that are out there, not enough companies, and they're looking for the deal. They're looking for the deal. Now, where these deals going to come from? They can come from anywhere. You know, you can structure good deals. If you have a good team there, you can structure a good deal and put something great together. But yeah, so again, I think that with all the SPACs that are being developed, I just hope that it's not overkill, because when you're at dinner and you're speaking to your mama and she brings up a SPAC to you, you got to wonder, when Main Street starts talking about some things, and this is the rule of thumb with Wall Street, when Main Street starts talking about things like they are experts at it, this is when you have to take a step back and wonder, is it a little bit too much? Is a little bit too much. Um, Again, the deals are out there. They have high quality deals. I just hope that they don't look for the low hanging fruit. Hopefully, they go and they find the quality deals out there, so that not only do the SPAC sponsors and whoever is doing the pipe, they do well, but the retail investors, they're there for the growth, right? They want the opportunity to grow with the company, and that's the key thing. Companies that have legs, you do that, you're in good shape. You're in good shape. Trust me on that one. Now I want to shift to talking about cryptos really quickly. I don't want the show to totally revolve around SPACs, even though it is revolving around SPACs today, because this is what's on my mind. But I also want to talk about cryptos there, because you have, I believe it was Citibank that came out and they said that Bitcoin at some point may be the preferred, e-commerce vehicle or currency, digital currency for people. You gotta, if you talk to anyone, no one's using Bitcoin to go buy a thing. They may, in little fractional amounts, but the thing is, the Bitcoin, it zips up and down so much. You have 10, 20, 30% swings, that it's more of a store of value, okay, than it is a transactional item for daily use. Okay, it's more like just a wild and crazy stock going up and down, up and down. You want to call it a commodity? Okay, it's a commodity going up and down, up and down. All right. People are looking at it as an investment. That's the whole point. They're looking at it as an investment, not so much as a vehicle to perform daily transactions. If that was the case, then the utility would be greater for Bitcoin. Okay, Bitcoin within itself, even as an investment, as a commodity, in that realm, it'll still do well. Okay, but at the end of the day, it comes down to the utility. I say this every time. Whenever I talk about crypto, it's about the utility. What are you using it for? If it has no utility, then what is it? What is it? What are you using? You have so many cryptos that are out there. I got to say, 98% of them were issued out there. They did ICOs, STOs, whatever they did. And the bottom line is they don't have utility. You have some that do, some that are now, you're talking about, you have some that have to do with art and other digital assets and things like that. And that's cool stuff, because there's a utility there. And it's a little different. It's a little different than a crypto that's trading like crazy. Okay, so you have there has to be a balance, and I want to touch on this too. That a lot of people bark about decentralized and centralized and so on and so forth. Here goes the deal. Okay, if you have something that's decentralized, is that good? Yeah, it could be good. Okay, it's fine. Like Bitcoin is decentralized, but that was an evolution of sorts as it started to build up, Ethereum and so on and so forth. Now, talk about centralized. When you're talking about something that has to do with, I don't know, something that's asset backed, or something that has a utility, you need it to be centralized, because you want to make sure that you're protected. If it's decentralized, how are you protected? How is it going to be backed by anything? It's going to be very difficult for that to happen. So, I think that people need to look at the utility. I don't think, I know they have to look at the utility, because if you're not looking at the utility, the bottom line is that, you know, you're, if you don't see the utility in a crypto and it's not there, you have to ask yourself, what is it for? Now, if you're going in there and you're day trading and you're treating it like Vegas, more power to you if you make money. Not everybody makes money. You get burnt too. Seen that happen. It's just, if you take all these cryptos that trade like crazy, that don't have any utility, you take them and you equate them to a pink sheet stock that has no value, that's trading at 0.0001. Okay, that type of thing. All right, you want to, if you want to look for value, look for the utility in a crypto. Again, Bitcoin itself, different animal. It's going to have, a different type of value. Not so much the day-to-day transaction as people are trying to do. Again, somebody smart is going to come up and they're going to come up with an idea, which I'm not going to be the one to mention it here, but come up with an idea to make it a better ecosystem where you can have something that's utilized, for daily transactions. You do that, it changes the game. All right. Anyway, now that's about it for this episode of Money Never Sleeps. I want to thank you for tuning in. Again, a lot of SPACs out there. I talked about it. A lot of SPACs, as you can see. You got celebrities, athletes. You have, fund managers. You have CEOs all jumping on board. You have the Jay-Z's, the Shaqs, the Steph Currys, the Serena Williams, the A-Rods, probably the J-Los and the Bebos and the Kim Kardashians and everybody else jumping on board. And they're looking to take part in what's happening. So we'll see how that works out. All right. But anyway, until next time, I think my next show, I'm going to speak more about commodities, because there are things going on in the energy sector and the precious metal sector that I would really like to touch on. And I'm going to take that time on the next show to talk a little bit about it. All right. Until then, thank you. And you guys have a fantastic trading day.
Initiating shutdown sequence.
You're listening to UCW Radio. In your face.
What is your major malfunction?
So let it be written. So let it be done.
Ladies and gentlemen, my mother thanks you, my father thanks you, my sister thanks you, and I thank you.
All opinions expressed by Louis Velazquez on the Money Never Sleeps radio show and its website are solely his opinions and do not reflect the opinions of the UCW radio show or their parent company or affiliates, and may have been previously disseminated by him on television, radio, internet, or another medium. You should not treat any opinion expressed by him as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. His opinions are based upon information he considers to be reliable, but neither the UCW radio show nor its affiliates, parent companies, and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. The UCW radio show, Louis Velazquez, its affiliates, parent companies, and or subsidiaries are not under any obligation to update or correct any information provided on the radio show or on the website. His statements and opinions are subject to change without notice. No part of his compensation from the UCW radio show is related to the specific opinions he expresses. Please read the full disclaimer on MoneyNeverSleepsRadio.com.